this is related to the updates that came in during the budget, and certain tax laws were changed to tax crypto assets. And now remember that the finance minister very clearly avoided talking about cryptocurrency. They are still calling it, the government still calling it crypto assets, but this we'll talk about the ambit, we'll talk about what has changed and what you need to bear in mind. Joining me to talk about all of that is Homi Mistry, partner at Deloitte India. Thank you so much, Homi, for taking the time, and apologies for having made you wait. Let's talk about first, for those that are not familiar with the change that was introduced, what the new regulation is. It kicked off at the start of the financial year. Could you tell us everything that we need to know about it?
Yeah, thank you, Alex, and good evening to everybody. In this budget for 2022, a lot of changes have taken place in the case of what's known as virtual digital assets, basically cryptocurrency, and there's a wide definition of the same. What basically the Finance Act says, a virtual digital asset means any kind of an information or a code or a token which has been generated through cryptographic means or otherwise, and it provides a digital representation of a value exchanged with or without any consideration, with a representation of an inherent value, or it functions as a store of value or a unit of account, including use in any financial transaction or an investment, and which can be transferred or stored, or it can be electronically traded. It could also be a non-fungible token, or it could be any other digital asset as the government may notify in the official gazette. And a non-fungible token means basically a digital asset as the government may notify in the gazette. One thing to be borne in mind is that these VDAs do not include currencies, whether Indian currency or foreign currency. So that is something to be borne in mind. That's the definition of VDAs.
Absolutely. But let's talk about, Homi, let's talk about the tax incidents that will now come into play. Because there are two elements I think that we need to focus on. One is the tax on the gains made in these assets, both crypto currencies, as you have just pointed out, and non-fungible tokens, which are representations usually of art in digital form or other digital representations. Any gains that you make will be taxed, but there's also at some point a TDS that will kick in, right? So could you tell us about those aspects?
Yes, Alex. So the government has now brought in a new section, basically where you transfer these VDAs, that is virtual digital assets. They say the tax that you would have to pay on the kind of profits or gains that you make on them would be at the rate of 30% plus applicable surcharge and cess. So if you're on the higher tax income, for example, if your income is more than 50 lakhs but less than 1 crore, you'll be liable to pay a surcharge at 10%. If it's more than 1 crore, at 15%, and so on and so forth. So basically, the government wants to tax you on the gains on these virtual digital assets at the rate of 30% plus applicable surcharge and cess. The government has also clarified that you can't claim any kind of a deduction against the sale consideration. The only deduction that you can claim is the actual cost of acquiring the sale. So that can be claimed as a deduction, but no other expenditure. For example, you may have paid some transfer fees or brokerage, etc. You cannot claim a deduction while computing your profits or gains. In case you make a loss in these virtual digital assets, you cannot set them off against the profits of any other digital asset or against any other head of income. So these are the kind of restrictions which have been placed. You can't, unlike in the case of other types of income or other types of capital assets where you could set it off depending on case to case. In the case of virtual digital assets, that is not permissible. Coming to your other question also, Alex, there's also provision now of withholding tax or TDS. The government has now brought in a new section known as 194S. And what it states is, in case any person is liable to pay to a resident any sum for transferring these VDAs, then at the time of credit or payment, a TDS at the rate of 1% of this consideration will have to be deducted at source. And in case the consideration is not fully by way of cash, suppose it's partly in kind or partly in exchange for another VDA, in any event, what has to be borne in mind is that the payer, that is the buyer, will have to ensure that before releasing the funds or the consideration to the seller, the necessary taxes have been paid. This is something also which is important to bear in mind, where the entire consideration is not paid fully in cash. There are some exemptions allowed to the payer in cases where the person is known as a specified person. For example, an individual or an HUF which does not have any business income or profession income, or in the case of an individual or an HUF where the sales or turnover do not exceed 1 crore or the income by way of from profession does not exceed 50 lakhs in the preceding year when the VDA is transferred. In such cases, there will not be any withholding tax provided the consideration does not exceed an amount of 50,000 rupees in a year. And in the case of persons other than these two above specified, then the limit is reduced to only 10,000. So these are the kind of exceptions provided as far as TDS are concerned.
Relatively small threshold. So just so that my viewers understand this very clearly, Homi, assuming that you're selling me Bitcoin worth 1 lakh of rupees, and I have to pay you, and I'm paying you in Indian rupees, it is incumbent on me then to withhold or to deduct that 1% of the transaction value, right? So essentially, I would be deducting 1% of 1 lakh rupees before I pay you the sum. Okay. This is not kicked in yet, though. It kicks in at some point in the future, right?
So this taxation of VDAs is already effective from 1st of April 2022. And in the case of TDS, it'll kick in from 1st of July 2022.
The other aspect that I wanted to cover had to do with gifting of these virtual currencies. Now, in other asset classes, there are certain rules that govern it. How does one need to bear in mind? So, for example, I would think that an NFT would make for a nice gift. But what are the tax liabilities when you're talking about a gift of an NFT, for example?
Yeah, so for example, the recipient who receives this gift, if he's receiving this gift from, let's say, a relative or at the time of inheritance or under a will or at the time of marriage, and there's some other conditions also, then in such a case, that gift is not taxable in the hands of the recipient or the donee. But in other cases where the gift exceeds 50,000 rupees, then in such a case, the recipient would be liable for paying tax, on the excess. So supposing, for example, he receives this NFT and let's say it's worth, let's say 10 lakh rupees. Then he'll have to pay tax on 10 lakhs minus 50,000 rupees on 9.5 lakh rupees that the recipient will have to pay tax, and that will be taxed as income from other sources.
There's also the other aspect in terms of how do you manage this, right? I'm just trying to understand when we're talking about advanced tax liability, right? Because if you're talking about gains made out of crypto assets, it would also fall under the ambit of having to pay advance tax over a period of time?
That's correct. So whatever gains so one has to bear in mind, whatever gains that one has made or expects to make, one would have to try and estimate the same. And also, it's important to bear in mind that when you calculate the advance tax, of course, you can claim a credit against the TDS also. So when you calculate the advance tax, you should also estimate this approximately 1% of the TDS of the consideration, which can be reduced from the tax payable. And on the balance amount, you'll have to pay the advance tax in the installments as prescribed, which could be 15% on or before 15 June, or another 30%, that's 45% before 15 September, another 30%, that's 75% on or before 15 December, and the balance 25%, that's 100% on or before 15th March. And even if the full taxes are still not being paid by 15th March, then you can make up the balance by 31st March. But you have to bear in mind that you pay the proper installments of advance tax, otherwise there could be interest levied.
Absolutely. Thank you so much, Homi. A very insightful conversation. I think a lot of our younger viewers will have gained knowledge from this session that we've just had. Thank you so much.
Thank you.